Good afternoon. My name is Aisha Chugtai, and I'm the chair of the Budget Committee. I'm going to call to order our adjourned committee meeting for Wednesday, November 13th, 2024. Before we begin this meeting, I want to offer a friendly reminder to all members, staff, and the public that these meetings are broadcast live to enable greater public participation. These broadcasts include real-time captioning as a further method to increase the accessibility of our proceedings to the community. Therefore, all speakers need to be mindful of the rate of their speech so that our captioners can fully capture and transcribe all comments for the broadcast. We ask all speakers to moderate the speed and clarity of their comments. At this time, I'll ask the clerk to call the roll so we can verify the presence of a quorum.
Councilmember Payne.
Present.
Wansley. Absent. Rainville. Absent. Vitaw.
Present.
Ellison. Absent. Osman.
Present.
Cashman.
Present.
Jenkins. Absent. Chavez.
Present.
Chowdhury.
Present.
Palmisano.
Present.
Vice Chair Koski.
Present.
Chair Chugtai.
Present.
There are 9 members present.
Let the record reflect that we have a quorum. I will also remind my colleagues that we're using speaker management today, so please make sure you sign in. Colleagues, we have 3 items remaining on our agenda today, which are items we were unable to get to at our regular meeting yesterday. First, item number 1 is a presentation from the Minnesota Department of Revenue on property tax relief programs. We have 2 speakers with us to present, Safia Farah, Somali Outreach Coordinator, and Miko Yang, Asian Outreach Coordinator. I want to extend my deepest thanks and gratitude to the presenters for their flexibility in coming back today when we were unable to get to their presentation yesterday. Welcome, Ms. Farah. You're welcome to come up and present.
Good afternoon. Thank you for inviting Minnesota Department of Revenue to speak about the upcoming filing season. First, want to make a disclaimer. The information in this presentation is based on the laws in effect when it was written. It does not supersede or alter any provisions of Minnesota laws, administrative rules, court cases, or revenue notices, and it does not provide tax advice. My name is Safia Farah, and I am the Somali Outreach Coordinator for the VITA, which is the Volunteer Income Tax Assistance Program, and also the TCE program, which is tax counseling for the elderly for the Minnesota Department of Revenue. I support all the free preparation sites in the central area of Minnesota and also the metro area. So today's topic is the following that we'll be discussing today. We will be discussing the renter's credit, homestead, special refund, senior property tax deferral program, market value exclusion for veterans with a disability, and also other helpful resources. So there are big changes for the upcoming 2025 filing tax season. The major change this year for renters is that the renter's property tax refund is moving. Beginning in January 2025, you will be able to claim the renter's credit on Form M1 instead of filing for Form M1 PR. So even if you are not required to file a Form M1 based on your income earned, you must file to get the renter's credit. This basically means that the credit will affect the refund for balance due on the Minnesota's individual income tax return, just like all other credits, and you will not receive a renter's property tax refund later in the year like you have been accustomed to. So since this credit will now be on the Minnesota individual income tax return, we will use adjusted gross income, not household income, which historically included certain non-taxable income to determine the rent credit. However, subtractions still apply for those 65 and older, disabled, and for dependents. Renter credit reminders. Renters do need a copy of their certificate of rent paid, also known as the CRP. Their property owner or management agent must give you the CRP no later than January 31st. And you have to file by April 15th. Taxpayers will also have a longer amount of time to claim their credits because the statute of limitations on income tax return is 3.5 years. Unlike property tax, which is 2 years. To claim their renter's credit on a return previously filed, they will amend their Minnesota tax return and add Schedule M1 rent. Qualifications for this is you have to be a Minnesota resident. Household income must be less than $75,390. Live in a building where either property taxes were payable for 2024 or payments in lieu of property taxes were payable in 2024. To qualify, you must also own and live in your home on January 2nd, 2025. Have your home classified as homestead with your county. Pay or arrange to pay your property taxes, household income for 2024 less than $139,300. Tongue tie, sorry guys. 139,320. So your property must be classified as homestead, or you must apply for homestead classification before December 31st, 2025 with your county assessor's office. So renters will not be the only ones to see changes on the property tax refund. Since the renter's property tax refund has moved, only the homestead credit for homeowners will be on the property tax refund starting with tax year 2024. We eliminated Schedule M1 PR, additional income, and you can now list up to 3 different types of non-taxable income. Since the special refund worksheet was infrequently used, we have removed the calculation from the property tax refund to simply the form and create a new schedule, M1 PR SR, which is M1 PR special refund. While a regular property tax refund is based on your income and property tax, a special refund is based on how much your property tax has increased. The calculation has moved to Schedule M1 PR SR. To qualify, you have to have owned and lived in the same home for on January 2nd, 2024, and on January 2nd, 2025. Your home net's property tax increased by more than 12% from 2024 to 2025, and the net property tax increase was at least $100. Lastly, the increase was not because of improvements you made to the property. This program, so the Senior Property Tax Deferral Program is for seniors, which may allow them to defer a portion of the property taxes they owe. To qualify, all of these must be true. Must be 65 years or older in the year that you apply. If married, one spouse is 65 or older and the other spouse is at least 62 years old. There's household income also needs to be less than $96,000. They have owned and lived in a home for the last 5 years. And lastly, their home has been homesteaded for 5 years. Additional requirements include that it does not have reverse mortgage. They do not have a reverse mortgage, a life estate, or any state or federal liens on the property. Other liens against their property are less than 75% of the estimated market value. So how does this program work? The property tax will be 3% of taxpayers' total household income based on their prior year income. The state pays the remainder as a loan, and when the taxpayer sells their home or involuntarily cancels the deferral, they must repay the loan plus interest. The interest rate also varies, but does not exceed 5%. We will apply certain taxpayer refunds and payments to their loan. We encourage you to visit our website and have qualifying residents submit their application online. The market value exclusion for veterans with a disability program reduces the market of the home for the tax purposes, which may reduce their property tax. Qualifications are based on whether the taxpayer is a veteran, surviving spouse, or primary family caregiver. The property must have a homestead qualification, and the program is administered by their counties. There are two exclusion levels, which is $150,000 and $300,000, depending on your status. For veteran qualifications, veterans may qualify if they are honorably discharged from the United States Armed Forces, have a service-connected disability, a rating of 70% or higher, own and occupy a homesteaded property on December 31st. For surviving spouse qualification, a surviving spouse of a qualified veteran may be eligible to continue receiving the exclusion if the veteran had a 100% permanent and total disability rating. They may still qualify if the veteran did not receive the exclusion before dying. Surviving spouse receives dependency and indemnity compensation. Veteran had a service-connected death while in active service. If all requirements are met, surviving spouses may qualify for $300,000 of market value exclusion until they remarry. Transfer or dispose of the property, the spouse can have a one-time sale of the property and still retain the exclusion. Primary family caregiver qualifications, they may qualify if they are approved by the U.S. Department of Veteran Affairs, also known as VA, as the primary family caregiver for an honorably discharged veteran with a service-connected disability of 70% or more. They also would have to own and occupy a homestead property by December 31st. The veteran that the primary caregiver cares for cannot also own the homestead property by December 31st. So how to apply? Veterans must work with their veteran service officer to get their disability rating. Surviving spouses must apply to continue to receive exclusions, and veterans apply to their county assessor's office by December 31st to qualify for taxes payable in the next year. Qualifying veterans must provide a U.S. government form DD-214 or other military discharge papers and their documentations from the VA verifying disability status. Surviving spouses of veterans who had 100% total and permanent disability must provide documentation describing their benefit as surviving spouses of veterans. Also, surviving spouses awarded dependency and indemnity compensation must provide a verification and dependency and indemnity compensation. Primary family caregivers also must provide certification. They qualify for benefits described under the Program of Comprehensive Assistance for Family Caregivers and information necessary to verify the discharge and disability status of the qualifying veteran. The veteran that the primary family caregiver cares for cannot also own the homestead property by December 31st. Now we will go over helpful resources. You can visit our website, which is revenue.state.mn.us, and you're going to select the individual tabs to find these resources in the top task section. A link to the MN forms and instructions. You can see a list of all the free tax preparation sites in Minnesota. And also a link to the WMR so that you may pay and check on the status of your returns. There are two ways a taxpayer can get free tax preparations. The first option is filing through a software provider. This is a great option for people who are comfortable filing their own returns. Another way of getting free tax preparation is through the free tax preparation sites, also known as VITA. These programs help prepare federal and state income tax returns. Go next. So who qualifies for VITA? You would need to be 60 or older. They are a person with a disability. They speak limited or no English, and their annual income is less than $67,000. The AARP tax sites do not have income or age restrictions. We recently launched a new outreach toolkit webpage. You would just be able to enter promotional materials into the search box. That way, you're able to see the tax credit, informational videos, printable materials, and newsletters and social media content. All right, any questions?
Thank you for that presentation. For context, colleagues, we invited the Minnesota Department of Revenue to present on programs that can help provide relief for property taxes in this year. I know that the impact of property taxes on residents in our city is something that lots of council members are paying closer attention to. And so we wanted to just get a sense of some of the programs that are available to those that meet the qualifications that were outlined. Are there any questions from committee members related to this presentation? I am not seeing any, so I want to thank you for coming in and presenting.
Absolutely. Thank you guys for your time. Thank you.
Thank you. And with that, I'll ask the clerk to file that report. So now we will move to item number 2 on our agenda, which is several appropriation resolutions related to the American Rescue Plan Act. For that, I will now invite Jane DeSenza from the Finance and Property Services Department to begin that presentation. Welcome, Director DeSenza.
Hi, everybody. Jane DeSenza, Budget Director within Finance and Property Services. Just getting all my papers arranged here. Okay. So I'm here today to present some technical changes that the Finance Department is recommending with the goal of closing out ARPA this year in alignment with our plan and also, most importantly, without returning any funds to the federal government. The agenda today is to revisit some of the information that Deshani Dye, our CFO, presented at her July ARPA update presentation. We will spend a little bit more time talking about the concept of revenue replacement, since that is a key factor in the vote that we're asking you to take today. And then we'll get into the specifics of the request for council action. So some context. The city received just over $271 million through ARPA, which was meant to sustain state and local governments through a period of extreme revenue loss. We have long planned the spending to occur from March 2021 to December of 2024. And we held a competitive budget process around these dollars. So we had a public survey to get community input on what the priorities were. Departments submitted budget proposals, much like they do in the standard budget process, and then the council considered and amended and approved those ARPA appropriations. The city landed on 5 goal areas for ARPA dollars, so housing and homelessness, economic rebuilding, public safety, climate and public health, and of course city capacity and performance. We also used a large portion of our ARPA award as revenue replacement. And so what you can see on this screen is the declining amount of revenue replacement that we relied on in our standard budgets from 2022 through 2024. And you'll notice 2025 is not on that list. We have long planned for it to end after 2024. So this strategy was put in place to help us return to our normal level of service before our revenues had recovered. The image that you see on this screen is from some of our original ARPA budget documents, which are still linked on our budget website. And it shows the top line, which is sort of the normal trajectory of city revenues pre-COVID, and then that steep decline when COVID hit. And that difference there is sort of what revenue replacement is meant to address. So revenue replacement was sort of a novel concept that Treasury came up with. They created a formula to help cities calculate what that actual revenue loss was as a result of COVID and those ensuing shutdowns. And that's what allowed us to classify a large portion of the award as revenue replacement. And what did that do for us? It gave us some flexibility and some stability. We did not have to do wide-scale layoffs. We were able to maintain our level of service to the community, and we did not have to spend down our fund balance. There's a link at the bottom here in case you're interested in learning more. The Brookings Institution has some good resources on revenue replacement in a macro sense. So since you last heard from Finance on this topic in July, we've been doing a lot of work to understand where departments are at on their projects. So returning to those other 5 goal areas, what have they been doing with these dollars, what's obligated, and what's actually been spent. So many of these projects, as you know, have obligated funds. So they have a contract for their projects. They have expenses that they've committed to. And many of those expenses are committed to through the end of December. So as of November 1, when we did this analysis, the city had spent actual money out the door. We had spent $245.9 million. And that brings us to the action for today. So ARPA funds are required to be obligated by the end of 2024. So they have to be contracted, there has to be an appropriation. We cannot re-obligate them after the end of 2024. And so that brings up some risks for the city. By increasing revenue replacement in the current year, we have an opportunity to mitigate that risk, to continue spending on the projects that council has deemed appropriate and has appropriated these dollars for, and also to avoid sending money back to the feds. So if we want to talk about the risk a little bit more, so the city might have funds that are obligated. There might be a contract in place. Maybe it's with a small nonprofit. Let's call $500,000 is on this contract. By the end of November, they've only spent $250,000 of that contract. They insist that they're going to spend the money, they're going to do the work. But on December 23, they close their doors for good. The work does not get completed. We do not get invoiced. That's another $250,000 that the city then has to send back to the federal government because it is too late in the year for us to make other choices with those dollars. And so today's action is really meant to just mitigate against that risk and maintain the legislative intent of the original ARPA appropriation. So I needed a flow chart for this, so I hope you'll excuse my juvenile graphic design. But what we are doing today are really the 3 squares on the screen. So we have $15.74 million in obligated but unspent ARPA dollars as of November 1. So what we are proposing is we remove those dollars from the ARPA fund budgets. That's the box in orange. And then we are increasing the revenue replacement to bring those dollars into the general fund. So they can't get into the general fund to be eligible for general fund rules unless we bring them in through revenue replacement. Once those are in revenue replacement, we can then make sure that the departments have the resources that they need to finish out those projects by the end of the year. And so the action is proposing that we increase department budgets in the general fund to finish out those obligations. So you'll notice that there's a gap between the $2 amounts. So we have $15.74 million, and then we're asking to reappropriate $14.97 million of that back to departments to finish out those obligations. The remainder, $780,000, which is just a tiny fraction of the original award, will increase the general fund balance. Part of this action also addresses North Commons, and I wanted to just proactively tackle that question with all of you, and certainly can have more discussion on this. This slide shows the history of the North Commons ARPA project. So this is something that was adopted in 2022, $3 million for this Minneapolis Park and Recreation Board project to redo the North Commons Park on the north side. Those dollars have stayed within Finance's ARPA budget until this summer. We had some budget moves that moved the public safety aid and downtown assets around, and so part of that legislation was moving the North Commons funding through revenue replacement into the Finance and Property Services General Fund budget. In September, we then had the Agate action, which reduced department budgets, including finance. So by reducing the Finance General Fund budget, a portion of the North Commons dollars were impacted. Today, we would like to solve that problem by reappropriating the $350,000 back to that project through that revenue replacement remainder. Solving the problem, making sure that they have the full $3 million available for the project, and also being in compliance with ARPA rules. So where does this happen in the flow chart? This happens in the $14.97 million, the far right box. So that is part of increasing those department budgets. And with that, I think I'll pause and answer any questions you might have.
Thank you for that presentation, Director. Colleagues, are there any questions related to this item? I'll first recognize Vice Chair Koski.
Thank you, Madam Chair. Thank you, Director. Appreciate the presentation. I just have a couple questions just from going through more of the details, I guess, of the chart. So a little more in the weeds, I guess, than what was presented here today. But so comparing the ARPA reallocation proposal to the ARPA update we received in July, there are 6, it looked like, ARPA projects that had remaining balances in July, but I don't see them listed in the resolution. So I can name them. So it was the community trauma response protocols. That was for about 1.2 million. Neighborhood traffic calming, 48,000. Corridor activation, 5,000. Community food needs, 500,000. And then MPRB youth investment, 344,000-ish. So have each of these ARPA-funded projects spent their remaining budgets? Is that why?
Through the chair, Vice Chair Koski.
And sorry, that was just 5. My apologies, not 6.
Sure. So I believe that's the case for most of them. We can certainly follow up if you don't mind, because I just don't have them all memorized. But I know for community trauma response, there's some specifics around ARPA eligibility for public safety type projects. And so that's one that is spending down through, those funds were contracted in the fall. And so they are going to spend that down in ARPA to get through the end of the year, because the type of expenditures are not eligible currently under the general fund.
Okay.
Yep.
Yeah, so if we could just add that to a memo of a follow-up, and I can send in detail to the clerk so it's easier for them to. So again, comparing the ARPA reallocation proposal to the update that we got in July, there were 4 ARPA-funded projects in that proposal that were not listed in the ARPA update. So there was Step Up Work Readiness Program, Built Environment, Public Works 311S, and then Enhanced Litter Services for Cultural Districts. I'm unclear if these projects were listed under one name and maybe the update, and then maybe just in a different name. And so we could add this to the memo if that's helpful.
Sure. Through the chair, Vice Chair Koski, I can speak to some of them. There is an attachment. We made a different table, which is on the LIMS file, and I can certainly pull it up here if that's helpful. But I know Built Environment, for example, is listed on there. So Built Environment was a project in neighborhood safety. There's about $36,000 remaining.
Okay.
And that one is coming back to the general fund to build the balance.
Okay.
And what were the others? Sorry.
Step Up Work Readiness Program.
Step Up.
Maybe I just was looking at the wrong.
There's a lot of documents. It's hard to summarize this information. So Step Up was part of, that was $317,000 remaining, and the department does plan to spend that down in its entirety, so that's part of the reappropriation amount.
Okay, I guess I just wasn't seeing it in this new ARPA update, so maybe we can, I'll send it in the memo and get some clarity if that works, unless you want to pull it up.
I mean, I think, yeah, we can
Okay.
pull it up here, I have it. I appreciate that it's probably hard to read, but this is one of the attachments on the LIMS file, so definitely encourage you all to take a look. It's sorted by project name first, but you can see the department in the second column there. So the step up is right here.
Okay, all right, okay, I see that there, okay, okay. Okay, I see that they're in this, but they weren't in the July, is I guess maybe what I'm, in that, the former update that we had.
Okay, I would, through the chair, I would need to follow up on that.
Okay.
I can't speak to that
Okay.
at the moment.
Okay, that's totally fine. Well, I'll add that to the memo. Then, when we did receive the ARPA update in July, I made a conservative estimate that the city would have around $7 million in ARPA funding remaining at the end of the year, a moderate estimate of $11 million, and an aggressive estimate of almost $19 million. During the presentation that you gave, then you estimated that the city would have about $1 million in ARPA funding remaining at the end of the year. This ARPA reallocation proposal shows, as you just stated, 15.7. Can you just describe what has changed between now and July that resulted in this difference?
Through the chair, Vice Chair Koski, I think I would sort of dispute the characterization. I think we are much closer to $1 million remaining, because I'm looking at what is unobligated and unspent. That's attached as an appendix to this presentation. That totals up to about $1.1 million.
Okay. Okay. And then the ARPA, well, it's on, I'm showing it right now here. So the ARPA reallocation proposal, it shows 23 of the ARPA funded projects that were, I'm going to use the word cut, but I'm just using like Heritage Park, the Black Business Week, or unspent. Can you describe like how these decisions were made?
Through the chair, Vice Chair Koski, it's a good question. So I would say that this was done in deep consultation with the project leads and the departments. And so you'll see some of these dollar amounts are very minor. So take, for example, Black Business Week. There's $58 remaining on their project. That tells me they did a pretty darn good job spending the appropriation that was given to them. Similar story with the Community Safety Specialist Pilot Program, $1.59 remaining. It's just sort of a rounding error. Some of these have larger balances. But I think for Heritage Park, the work was complete. That was just the remainder. So out of an $875,000 appropriation, they didn't quite need every dollar of that. And so they're able to return $7,900 to the city as a whole. So I included in this presentation all the projects that have unspent and unobligated balances that are returning to the general fund. So what are the projects that had excess resources?
And is this, I mean, I know there's 23 of them, so, okay, so you have the rest of these. And so there's a similar story to each of these around kind of the reasoning of what happened. So using Heritage Park as an example, it was spent. Are there any others that you'd like to highlight?
Through the chair, Vice Chair Koski, I think I'd just like to emphasize that we tried not to make any policy changes with this action. We are really trying to keep this a technical accounting change so that the original intent of the appropriation stands. This is really cleanup to make sure that the federal government is not getting these dollars, that the city can still have them. So I think, to take a look at public safety training of CSOs. I think that's a bigger ticket item. They have about $100,000 that they're not likely to spend, and I think that's just by virtue of how many CSOs did they actually get in the door. So there's some personnel costs are hard to predict in that way. I think the recruitment, retention, and hiring support was sort of a big category with a lot of things happening. There was still negotiation happening even this year around some of the retention incentives that were part of the discussion, in 2022 and 2023. But because those things have to be bargained, that takes time. And so that's part of the reason why that did not all get spent down. I can certainly click through the rest of these slides if folks have specific questions on these. I will do my best to answer them, but certainly the project managers are the people most knowledgeable about them.
I'm okay. I think just a general update is helpful, and I think if any of my other colleagues have specific questions that they can jump in queue too. So, and just another couple questions here. So the ARPA-funded projects in this proposal, it has had the funding for the past 2 to 3 years. So just a few questions about those. So what have been the barriers preventing these 34 remaining projects from spending or using their remaining funding? My understanding is the funding is obligated, but what's the barrier to getting it spent and out the door?
Through the Chair, Vice Chair Koski, I think that unfortunately is going to depend a little bit on each of these projects. For projects that have personnel costs, some of the projects have hired temp staff to get through some of these things, and so those are costs that we would anticipate that they would need. We want to be able to give them the general fund to carry that work through November and December.
Okay.
And I think the contracting process is also just something that takes time.
And then have there been next steps put in place to ensure the funds will be spent and out the door in this next year?
Through the Chair, Vice Chair Koski, it's really funds out the door in the next couple of months is the goal here. So if a department, if we do not take action, for example, and these dollars go unspent, they don't spend in time, we lose those dollars. Mm-hmm. If we take this action and dollars are unspent, say there's the Lead and Healthy Homes project, say they have $10,000 remaining at the end of December 31. If we put those dollars in the general fund via revenue replacement, they can still continue to process invoices. If projects are rollover eligible, that's still a possibility. Those funds still stay in the city, or they just fall to the bottom line.
Okay, yep, no, that is definitely clear, and I'm grateful for this action. I'm grateful that we can do this in order to continue to do the work. But let's use that example that you just said. Is there a backup plan if you said we should be spending this all down in the next few months? What's the backup plan for if these projects don't spend down what they're expected?
Through the Chair, Vice Chair Koski, I think this is the daily work of finance, to be a support and check on the departments that we work with, to be in continuous conversation with them, to find out if there's barriers to spending. If departments fail to spend dollars that you all have reappropriated into the general fund, then that's the end of the story. They don't get those dollars automatically going forward in the future.
Okay, thank you so much. I appreciate it. I appreciate all the clarity.
Yep.
Thank you. I'll note that we have been joined in this committee meeting by Councilmember Jenkins, and next I will recognize Councilmember Vita, followed by Councilmember Chavez.
Thank you, Chair Chuktai, and thank you, Director DeSenza. I really love that you have this cleanup plan in order. Looks really good to me. I do have a couple questions. The first one is, you said that if the money is allocated by the end of the year, that it's for sure securely put, it's allocated to that specific item. So does that mean the reallocation of the $350,000 for North Commons will be allocated to it and is securely placed there? It can't be moved around anymore.
Through the Chair, Councilmember Vita, part of it being in the general fund means it's subject to the general fund rules, but I know that the CFO DI and the Park Board Finance team were working on assembling some sort of MOU to really lock that in place and make sure that it's rollover eligible.
Okay, yeah, that's really good. I'm just trying to make sure that we secure it, that it's rollover eligible, that we give the part, I don't think they're planning on collecting it in the next month, so I just want to make sure that it's there and that it doesn't get caught up in movement at any time. And so there is a secure plan in place for that. Okay, and then my next question is, about some of the group violence intervention work, like I know some of it was like pilot work that was in there. This money, do we know if they're gonna be planning to use it, to keep it in those allocations, but to use it at a later date? Or is this money that we think it just needs to be completely reallocated to something else? Like
So-
that youth and community safety, that's a lot of money.
Through the chair, Councilmember Vita, so the items on this slide are the column that says unspent unobligated. That's all coming back to the general fund.
Okay.
So these projects are done.
So they're done. Okay, all right. Thank you so much. That's all my questions.
Wonderful, thank you. Next, I'll recognize Councilmember Chavez.
Thank you, Council Vice President. Director DeSenza, I have a question about the Guaranteed Basic Income Program. Can you explain to us what's happening here?
Sure, through the chair, Councilmember Chavez, the Guaranteed Basic Income Program had $181,000 in its balance when we did this end of October, early November. The department has said that they will be using all of those dollars to finalize the GBI project. And so we're recommending that that be reappropriated for the department to conclude the Guaranteed Basic Income pilot.
Interesting. Thank you. So when we were here a couple months ago, we were told that there was no plan to use the nearly $250,000 of this program again. And I met with Director Hansen myself twice and was told directly by the director that there was no plan to use this program next year. And when I asked you directly about the funding of this program,
Sure.
you told me it was too late to reconsider ARPA dollars. And now it seems like there's been a course of change, and this money is now being used for next year, even though I was told it wasn't. So I'm trying to understand why the change of direction.
Are you done? Okay.
Yeah, I
Through
stopped
the
talking.
chair, Councilmember Chavez, the presentation from CFO Dye in the summer was also based on information that we received from the departments. So you've also talked to the departments. I've also spoken to the project manager for the GBI program to clarify this, because I know that was an item of interest. He assured me the dollars have a planned use. The city wants to make sure we can follow up with people who received the Guaranteed Basic Income allotments to see what the impact was on their life, and that is the planned use for the remainder of those dollars. So I think as we go through the year, we learn more about spending. Dollars change. Of course, from July to November, there's a lot of different spending actions that can occur.
So there was a plan that was changed. Is that what I'm hearing then?
Through the chair, Councilmember Chavez, it was not a plan that I changed. I
sure.
can't speak to what CPED may have changed. It may have been a miscommunication.
Okay, well, I guess I was miscommunicated 3 times then. Thank you.
Colleagues, are there any further questions related to this presentation? I am not seeing any. Do you want to continue? Do you have additional?
No, I
Slides
just
to
thank
share?
you for your consideration. I do hope that this can just be viewed as a technical cleanup, preserving the policy decisions that you've all already made. So thank you for your time.
Thank you. Seeing no further discussion, I will move approval of this item. All those in favor, please signify by saying aye.
Aye.
Those opposed, say nay. Any abstentions? The ayes have it, and that motion carries. Finally, item number 3 is a report on models of the participatory budgeting process. And for this presentation, I will now invite Andrew Hawkins from the Policy and Research Division within the Office of City Auditor. Welcome, Mr. Hawkins.
Thank you and good afternoon. Chair Chuktai, Vice Chair Koski, and members of the committee. My name is Andrew Hawkins. I'm with the Policy and Research Division. And we're going to talk a little bit about participatory budgeting practices and then some process considerations. Just to get started on the legislative background for this one came a while back in February of 2024 and was subsequently postponed until today, just due to a number of other items that were moving and some time constraints that we faced there. Just in the interest of summary, I will note that this year, this is the 17th project that's been delivered by PAR to the City Council, and this will be our final project of the year. So there have been quite a few things that have been coming through and out of our office. Moving into the introduction, again, I know we talked about this a little bit from a previous direction at the beginning of this year, but participatory budgeting, it's a democratic process where community members decide how to spend an allocation from a public budget. The idea is it gives people actual power and input over money and the way that money is directed. Like three of the criteria that are generally found in a PB-related process are just, again, a dedicated pool that's identified. Sometimes there are strings, sometimes there's not. Like the city can often outline, like the allowable uses, but there are examples where, again, like pots of funding are just allocated to community groups that have pretty broad discretion with how they're spent. The engagement strategy is one of the, again, primary components of this. Participatory budgeting programs, usually one of the underlying reasons that they're being pursued. There's an inclusion aspect to it where there's a portion of the population that's been underrepresented either in previous investments by the city or just in involvement in government. So the engagement strategy is a critical piece to bring those people into the fold. And lastly, the process stages and timelines are made clear. The transparency piece of this is part of that engagement and just making sure that people understand exactly what to expect from these processes. A lot of times, as demonstrated by the work of this committee, government budgets can be complicated. Timelines can also, can vary, and so I think it's hard for people to keep up. So a lot of times with this, making it clear up front what people can expect and staying to that timeline is a critical piece. As far as participatory budgeting goes, there's multiple types. There's not just one kind of be-all, end-all model that has to be adopted for a budgeting process to fall under PB. The four models that we've identified for this presentation. It's the Porto Alegre model, which that was kind of often cited as sort of the first real example of participatory budgeting in the modern era. That one's self-initiated by residents. There's a pot that's made available. And the residents have a lot of discretion over how that's spent. Proximity participation. Again, generally, it's a consultative process. There's no formal ranking or voting. Again, this from a city standpoint, we do some of this now with our actual budget, just going out into the community, talking about what's going to be in the budget and making sure that residents have an idea. There can be feedback collected, but there isn't a formal process where residents are actually weighing in, voting, or ranking in a manner that's going to substantively change anything. Community participation. This one, it's municipal leaders create the framework. There's meetings at multiple levels with delegates engaging at the municipal level. Projects are scoped, voted on, and ranked. This is often done in a matter of co-governance where the scoping is done on the city side by whoever the responsible authority is that would be carrying out the project. From a city side, our CLIC process is probably falls into the category of community participatory budgeting. And then lastly, multi-stakeholder participation. So again, this one's a lot like community participatory budgeting, but it often involves additional funding sources. So this can be where the city contributes a certain amount and neighborhood, from a city side, it could be a neighborhood organization seeks out additional partner funding through philanthropy groups, private sector orgs, nonprofits, and things of that nature. So with that one, I think the biggest difference is that it kind of goes beyond just government being involved. Now, getting into options for consideration. The first and probably most important stage in this whole process is determining what the what the problem is that's trying to be addressed. So if you're going to go through the effort of creating a participatory budgeting process, what are we trying to solve? Again, one of the ways that's extremely helpful and that's often done in this process is just the identification of problem statements, which is we're trying to solve the following problem. Here's some data around that issue. The reason this is helpful is because that's what then allows, decision makers to identify what the desired outcomes are. So if we've identified a problem that we're seeking to remedy, what outcomes would indicate to us that that problem has been addressed successfully by the implementation or use of a participatory budgeting process. And then lastly, just supporting the design of effective metrics to measure success. Like once you have those outcomes, then it's easier to break them down into what specific things can we measure that would indicate these outcomes are being reached. Next, again, assessment of current structures or processes. So with this one, like with most things, it's often extremely beneficial to figure out where you're at before starting something new. And so this just requires, again, a city to look at its use of existing resident groups and members. So I think understanding that there's only so much capacity while you're trying to reach people that might have been underrepresented. There's also a lot of structural components to participatory budgeting as far as residential steering committees, things like that. So again, especially with respect to the city, there's a lot of ways for residents to participate. We have a lot of resident-driven bodies through our appointed boards and commissions, through our neighborhood groups. So I think for this specific case, recognizing if there's any way to fold in those groups to some kind of process is definitely a worthwhile step, because again, you're going to, the more this, I think not necessarily watered down, but I think the broader this gets, we're by adding more and more and more groups with more and more specifically defined roles, it's going to become harder and harder to compete because you're pulling from the same limited pool of resources. Looking at the recruitment and engagement process, again, to touch on the ABC side, like what have we done with recruitment there that's been successful? What can we learn? How could that process be, like adapted or leveraged if it were to be used in a participatory budgeting environment? And the same with the engagement process. I know NCR's got their equitable engagement process. They've worked on their, in neighborhoods as well. So kind of, what are we doing right now that's been successful, and how can we adapt something similar if we were to pursue the PB process? Looking at the city's engagement mechanisms, so whether this is communications, NCR, budget, what do we currently have that's operating in a similar capacity to this, and how could that potentially support this process? Looking at project requests and project evaluation. So again, a key component to participatory budgeting is that residents have the opportunity to submit. In a lot, again, I should clarify, in a lot of structures, they have the opportunity to submit ideas. So, what does that look like, and what do we have on our side that's similar, where residents submit things to the city that are then reviewed by any number of staff? So with that one, it could be anything from how the city receives public comment to how, I know there's resident like complaints or input, there's 311, there's a number of entities we have that currently operate in a capacity that's, again, not necessarily the same, but similar in structure and form. And then with project evaluation and actually the tracking of format and submission, I'm going to group those all together because it's the most relevant example for this, for reasons I think are probably fairly evident, is going to be CLIG. We have our Capital Long-Term Improvement Committee. They currently, when those projects come forward, there's an evaluation that's done by the respective group that is all made available to the committee. Everything's tracked through the city's website and available for review, both what was selected and what was not. And again, the project submission evaluation, there is a report that comes back every year from the Capital Long Range Improvement Committee, just saying kind of here's what was chosen, here's what wasn't, and the justifications for everything. So that's, again, while not necessarily the same as a true participatory budgeting process, that's definitely the most comparable structure that we have. Next, we want to look at staffing. Similar to the previous slide, just identifying any existing capacity. There are examples where this is done on a percentage basis, where it's X percent of somebody's role. This is generally not what's going to come across as best practice or recommended. There will always be people that have some percentage of this of this role, but the recommendations from both cities' experiences and like the organizations that provide subject matter expertise in this field is 1 to 2 dedicated people. Should be considered as a kind of a baseline resource to help drive any process that a city is going to explore. And then again, identification of a home department. Just again, depending on the scope of eligible projects, depending on the funding that's being provided, how this is run, there's going to be a lot of people involved in any participatory budgeting process, but one of the key pieces that just ties back into the transparency is that there's a clear place that it's run from. There really isn't a recommendation as far as where that needs to be. A lot of it depends, again, on the scope. There's Seattle runs, they had one that was run from their version of NCR. They also had a standalone program that was a one-time effort that was run out of their civil rights department. So, in some cities we see this in their equivalents of CPED and Public Works. Again, there's budget groups that have been carved out that are responsible for this. So really, that there isn't necessarily any specific place it seems that it needs to be, but what is clear is there needs to be a place. Next, just looking at leveraging of third-party vendors. So there are not a ton of, at least from the dive into this, of organizations that do provide support on this, but there are some. It's very common that cities that are looking at this do seek out that additional support. Reasons that you'd want to do this would be that assessment of capacity. And then I think kind of building on that, it's the comparison of capacity versus familiarity. So, while you might be able to bring in staff, it's, like how much of that actual subject matter expertise are you going to be able to have, I think from the initial jump off point. Scope and funding considerations, again, the more funding, the more, the larger the scope, the more support you're going to need. If this stays relatively, small and manageable, you might not need, that much support. And then just, again, examples for ballpark costs on these come from the participatory budgeting project. Was 20 to 30,000 for just a role in advising. Support and designing was 50 to 100,000, and then implementation, so that would be everything all the way through, was 125 to 180.
Director Hawkins, before you begin this slide and continue with your presentation, I wanted to just note for the viewing public and for staff that are coming in, we are on the final discussion item in the Budget Committee agenda. We're going to complete this presentation from Director Hawkins, and then complete discussion, and then we'll adjourn this meeting and begin the Committee of the Whole meeting. I really apologize for the interruption. Please continue.
Absolutely. No, I appreciate the clarification. All right, so on this one, again, identifying the scope of eligible projects. This is, again, there's no one size fits all. There's no silver bullet. It really depends on the locality. So I think figuring out what the opportunities and challenges are specific to Minneapolis is a really important step. Obviously, just acknowledging that a lot of these projects will generally include some degree of capital projects, so capital and infrastructure. They include, and then there's an improvement component that usually involves parks and schools. From a Minneapolis standpoint, again, the schools are a separate issue, the parks are a separate issue, so that does narrow the scope a little bit. And then the scope versus funding dynamic. This is one where there's, again, I'm going to call it a tipping point, which is something that just, again, it could really only be found out through, I think, kind of deliberate engagement with residents and kind of figuring out what they're looking for in this. And that's basically, again, what scope is too limited to that it's not going to garner enough interest, and what funding level is too limited that it's not going to garner enough interest. So there is a kind of a sweet spot that can be reached where the scope becomes big enough, the available funds become big enough that you're going to start to see some engagement from people that you might not have seen otherwise. And then the last one was kind of builds on that. It's project cost capping. And so this is just determining if there's a limitation. So once you've identified the scope that's going to be available as part of the program, is there going to be a limitation on how much that project can cost? And so again, the reason this is done sometimes is just to keep things within a manageable, I think, spectrum, so that they're not being, the projects being brought forward aren't like too humongous, but also it allows the city to spread the projects around more. Next, we have determining funding amounts and the allocation process. So with this one, again, cost calculations. This is just figuring out, this is all going to be based on your available funds and scope. There's a variety of ways to do these, and we're going to get into some of them, including allocation modeling, but just figuring out, once you have dedicated a certain amount, how do you want to break that down? So do you want to break it down across, across wards, across areas of the city, across projects, things like that. Funding cycles or stages. This one is back to the pragmatic side of how this is rolled out. A number of cities, especially those that are just launching this, will do it in cycles or stages. So that initial stage can often be 2 years, where the first year is planning, the second year is, again, the implementation. To use Richmond, Virginia as an example, they're rolling out their pilot right now that's intended to be 3 two-year cycles that sequentially build up the amount of funding that's available. And then, to get to allocation modeling, again, these are some of the examples that we did come across. The per capita basis, there are recommendations from, I believe, Participatory Budgeting Project that was like a good number to start from was $100,000, or sorry, for every 100,000 residents, it was $1 million that was allocated to a PB process. There's also on a project basis, which that's where you get into the cost caps for the specific types of projects, and then the neighborhood allocations, where again, X amount of projects per area. To use Seattle and the recent initiative that they had just done with the People's Budget, I believe it was there could only be X amount of projects per geographic area in the city with an additional equity component that required a couple additional projects to be in areas that had been identified as being under-resourced by capital improvements in previous budgets. Supporting and promoting equitable access. This is one of the underlying, again, kind of driving forces behind why PB is pursued. So again, like that engagement, identification of the stages for input is a critical piece so that you can set people's expectations and understanding for what they're, when they can participate and what's being asked of them at every stage. That resident committees and volunteers. So again, just learning from what we've done. I know this has been at the center of a lot of the city's recruitment for boards and commissions is, how can we ensure that our boards and commissions represent the community they serve? And so I think taking that and applying it like to the strategy to figure out where there's gaps and what we can do is certainly worth pursuing. Process engagement. So again, outside of these committees, where are there opportunities for people to engage in the process? Again, the committees and the individuals that are being underrepresented are generally, there's certain constraints that, they're not going to have the time to serve on a committee or to be a volunteer that's going to, play a large role in driving this. So even just breaking it into the smaller pieces of where can you just engage as a resident of the city in this process might be more manageable for some people. Accessibility is huge, just minimizing barriers to engagement, making everything available virtually goes an incredibly long way. Idea submission and voting process fall under this, where there's, again, a virtual and a physical component to it. A number of cities have had quite a bit of success with just having voting kind of drop boxes around the city. People can pick up cards at libraries and other like grocery stores where they can submit their ideas through the drop box there, as well as that virtual submission option. And I think that, again, with the voting process, one of the really big differences here, and this is probably where you start to get into reaching people that might not have participated or have been participating in the process otherwise, was just allocating resources for the equivalent of door knocking and canvassing, just to go find the people, as opposed to the expectation that we've, I think, had with so many other things, which is, you come to us, we might go to their neighborhood, but we're not going to go to their door. Lastly, eligibility. One of the things that's unique with participatory budgeting is that it's an opportunity to engage residents that may not be eligible for, again, traditional voting in our elections. So I think that's where you can bring in a lot of people that would be underrepresented because they're not of age to vote for public office. All right. We're almost done here for anybody tuning in. Measuring success and continuous improvement. There's a ton of data that's available around this, and a ton of data that you need in order to figure out what what's working, what's not, and if you've been successful. The use of surveys and interviews or focus groups are, again, extremely common and beneficial, especially when they're implemented on an ongoing basis. And this includes interviews and focus groups with, again, people that are participating, with the city staff that are involved, with your volunteers, with your steering committee. And so you're getting that feedback from all of these different groups. And then, the collecting of participant information, you have to do it in order to figure out, if you're reaching the people you want to reach. Easiest way to do that is by comparing the participant information to, again, like historical voting records, things of that nature, just to see who's coming out for this that maybe hasn't engaged in the past. However, that can also be a deterrent to a lot of people, since anytime we inform you we're collecting your information, people can be understandably, suspicious. So just being transparent about what you're collecting, why you're collecting it, how it's stored, and how long you'll be keeping it is a key part of that process. And then lastly, just a continuous review. And that's where those interviews and everything come in, where this is just at every stage, while it's fresh in people's mind, we're continuously getting feedback and assessing what we can improve as we go forward. And then just the conclusion. As I touched on, again, briefly, this is a really complicated structure. What these look like in certain places can vary quite a bit. There's a lot of roles that have to be figured out. There's a lot of stages to the process, and there's a lot of structures that get involved. So it's really important that when this is done, it's, again, a collaborative design process, which brings in both residents to make sure that whatever we're going to pursue or build is something that's, that's desired. But also that everybody that's going to be involved in this feels like they had a seat at the table, because it'll make it that much easier moving forward. Next, just that identifying a starting point and current opportunities. Building something new is extremely laborious and hard. So the more we can identify where there might be opportunities to plug in PB-related processes to our current operations, the more it lowers that initial cost, the complexity, the unfamiliarity. But also just where there might be areas for improvement. And then lastly, long-range goal setting. I know this is, often these are things that people want to get going immediately, and to some degree you can, depending on the scope and size. But I think kind of acknowledging that, there's a really important role to be played through engagement with the community to help in the design of any process. And so that, the idea that you might have to start smaller, and then as you're learning, you continue to build up and scale up over time. With that, I will conclude my presentation, and I'm happy to take any questions from the committee.
Thank you for that presentation, Director Hawkins. Colleagues, are there any questions related to the participatory budgeting report and presentation that we received today? I'll first recognize Councilmember Palmisano, followed by Council President Payne.
Thank you, Madam Chair. Mr. Hawkins, it sounds to me like we already do two versions of participatory budgeting, right? CLIC, which makes recommendations on infrastructure, basically all of our infrastructure, to the many tens of millions of dollars. And then the Partnership Engagement Fund with neighborhoods, right? Also tens of millions of dollars. This feels far greater than these other cities that you've mentioned in your report. Any thoughts in your review of how we do that process?
Absolutely. Through the chair, committee member Palmisano, I think one of the biggest things that's unique for Minneapolis is the neighborhood organization structure. We've got 69, I believe, at last check. So that's something that definitely doesn't exist at a lot of places at that level. They might have something, again, that would be more similar to a ward level where there might be 10 to 15, but I think that degree of, specific nature is unique. With CLIC, there's versions of it that exist in other places where there's a group that just gets to oversee and weigh in. I think the size and scope of ours is a little bit more unique, just in terms of the 33, I believe it's 33 members. But just there is more representation on that group than I think what you see on a lot of traditional, whether it's committees or structures like that in other cities. So I do think that there are areas that are, again, if not specifically participatory budgeting, like they're adjacent, where we've got pretty significant infrastructure in the city of Minneapolis. The only thing I'd note is that I think the one difference would be how the projects originate. So that, in some cities it's the allocation of a certain set of funding and maybe some guidelines, but the ideas themselves are coming in from residents. Whereas I think with CLIC it's driven by, and there certainly could be residents reaching out to departments that then propose the process that would solve the issue, and that's what goes through CLIC. But they're generally funneled up through city departments and then looked at by that resident body and approved and recommended to the mayor.
Yeah, and then if I may, I did misspeak. That was a different fund. I think there's $1 million in the Partnership Engagement Fund. Still, the feedback that I've heard over time from residents is that while participatory budgeting seems like a good process, it really feels diminutive or top-down when government creates like an artificial sandbox and says something like, here's $1 million to play with. It's all taxpayer dollars. Mm-hmm. And so to say, here, go make decisions over here, just doesn't feel right to people. And I wasn't sure if there was any research in that, to that end, or if you have any thoughts that or insights that you've gleaned from your research in that.
Through the chair, your Councilmember Palmisano, it's a fairly recurring theme. It's unique and that's like the Porto Alegre model. It was kind of the idea of just here's a bucket, go nuts. For lack of a better way to frame it, that's not that common for reasons that, again, since it is taxpayer dollars, there are you always want to have some degree of stewardship over how it's going to be spent. If they're going to be committing city resources to something, like the city obviously wants some input on, the role they'll play in that if they have capacity. So just going the route of, yes, like the unrestricted bucket, I think is fairly scarce, at least at this point. And yeah, to the partnership engagement, that's at $1 million. Our neighborhood funding for our neighborhood networks is $4 million total. And then I believe for the 2025 recommended budget that went through CLIC, it's $278.9 million. So there are a significant amount of dollars that we at least have some degree of resident participation on. And there's certainly an avenue just through, I think, that engagement, because this is complicated. There's, again, 69 neighborhood organizations. Some of them are merged, some aren't. And then with just the work of CLIC and how you can access or participate in that, we're potentially just through engagement and outreach and kind of those campaigns, you can connect people with opportunities that are already existing. And that's where kind of finding out what residents want is at the core of all of this, because it's entirely possible that there's a large group of people that say, look, this is great, this is more than I knew about, I'm fine. So I think figuring out where that tipping point exists is definitely worthwhile.
Thank you. And I also just want to mention that, in fact, when we received the ARPA dollars, we got a lot of accolades for first going out into community and asking what the goals should be with our ARPA dollars. We didn't just do revenue replacement. Some of these last things here that you're seeing at the end of the line are very almost technical things to make sure that we spend every single penny. But the original ARPA process was fairly unique in our city to the way other cities did it, and really looking to make innovative forward progress. And I'm pretty proud that we all were able to do that as a city. We did a little bit of what I would call participatory budgeting with our ARPA dollars, even during a hard time. So thank you.
Quickly, through the chair, Councilmember Palmisano's point, another thing that, again, I think is becoming more common as places have rolled these programs out is having kind of a participatory budgeting, almost like a compartmentalized like lens that can be used where there's staff that are responsible for operating it. We did see that used with ARPA dollars in some places where you have a group that understands how this needs to be rolled out, since it's different than a typical budgeting process. And then participatory budgeting, as opposed to kind of a recurring ongoing thing, it can be done on a one-off basis as that type of funding, whether it's ARPA dollars or again, they can be public events. The Seattle example stemmed from the civil unrest in 2020 and the murder of George Floyd, where money was made available to be specifically targeted at community-initiated ideas around restorative justice and things kind of in that scope. So there is definitely an avenue where, just creating kind of the subject matter expertise to administer this in a variety of areas is the route that a city chooses to go.
Thank you. Next, I will recognize Council President Payne.
Thank you, Vice President Chugtai. I'm trying to triangulate some of the models that you presented with our current budget reality. And, obviously, every budget process is basically constrained by design. But I'm trying to think about how a truly community-led process would fit into like our charter limitations. And the thing that I'm thinking about, because and I think Councilmember Palmisano kind of was speaking to this a little bit about, creating these like very constrained sandboxes that, the borders of it are very clearly defined, and within you can play around a little bit. But I'm interested in just like, what does that kind of broader community empowerment look like? And I think in the context of a Minneapolis budgeting process, there's the council action at the end of the year, which to an extent, as engaged as we are with our communities, our amendments should reflect that, right? And our community's voice should be reflected in our own individual priorities as representatives of our community. But the least constrained part of our budget process is the mayor's recommendation, right? That's where the biggest constraint is political. You know, what's the property tax levy that our community can bear, and for what purpose? For what public purpose? Is that kind of more open-ended question? And I was curious if you saw in any of your examples, are they, you know, extremely restricted towards that kind of smaller sandbox where it goes $100,000 or $1 million, and you have some parameters around public purpose, but you can do what you want within that? Or are there other examples of actually getting to that like top line level of budgeting, of saying this is a little bit less constrained, it's more aligned with what the mayor's flexibility is, right? Because if the mayor wants to make an investment, well, they also have to propose a levy adjustment to make that investment, whereas when council gets to it within our process, we are within the sandbox of that top line levy number. So I was just curious if you saw in any of your landscape analysis examples of that less constrained version.
Through the chair, Council President Payne, I think the answer for that one is twofold. One of the reasons is I think what you described is part of it's why the sandboxes end up existing. In the sense of, you know, if this isn't done up front, then we're going to be reacting to stuff, you know, on the back end with how much people want, et cetera. So just if being able to identify a standalone amount that we promise not to touch, you know, you'll get that, and then we can run this process within that kind of, you know, bubble that's not going to be impacted by other priorities, I think is why cities have done that approach. But at the same time, I think there's also been an effort from, you know, a number of cities with, how that engagement's done. Because I think the more you can get that and mitigate on the front end, the easier it is to adjust on the back end. So from the standpoint of like our, you know, current situation with, you know, our budget, if everything's allocated before coming forward, then by definition anything that's being received by council that maybe wasn't incorporated into the initial budget is having to pull from something that's already been identified. So it creates a situation where it's going to be adversarial in nature just by definition. So I think that's why there are those carve-outs sometimes, is to just make sure that there's something we won't touch. But for, again, holistically, the larger budget process, I think that's, you know, without that really a clearly carved out identified process on the front end, that's where you're going to get into, you know, a situation where it's unavoidable that, you know, like I'll view it as, you know, your budget priorities mean that you know, it's a prisoner's dilemma, essentially. So. Hopefully, I don't know if that answered your question, but.
It's not an easy question with an easy answer, so thank you.
Wonderful. I'm not seeing any further questions or discussion related to this item, so I will ask the clerk to file that report. Thank you again for that presentation, Director Hawkins. Now, before I move to adjournment of this meeting, since we have COO Anderson Keller in the room and we have Director Hansen in the room, item number 2 on this committee's agenda today was the American Rescue Plan Act reappropriation resolutions. And one of the questions that came up during discussion was related to the guaranteed basic income pilot and the $250,000 approximately that were reported to council back in July as being unobligated, unspent, with no plan to get those out the door. And then there were a couple of conversations between Councilmember Chavez and Director Hansen to that you know, further. Where he continued to hear that there were no further plans to get that money out the door, and right now in the reappropriation resolutions, it appears that the guaranteed basic income pilot appropriation from ARPA remains in the CPED department, and so wondering, Director Hansen, if you can speak to that and just help us understand what happened.
Chair Chugtai, members of the committee, I'm Eric Hansen. I'm the CPED director, and I believe I pieced it together. I wasn't here. I didn't hear the dialogue between you and Director DeSenza about this allocation. And I want to reiterate that I did say that back in July that we had $250,000 unappropriated, which was what was reported to us when we put it forward to the council. It is now the staff has told me, or has told the budget office, there are some tail workings at the back end to do some surveys of the GBI participants. That was not raised to us at the time that we communicated this to the council back in July. I was under the impression that that money was available. As I said, it's up to the budget process to do it. That news about doing, because we're doing an analysis with the Federal Reserve Bank to see what the true impact of GBI was for these families. And there's a need and an interest of moving, of surveying those folks to see what that true impact was. That was, I'm not sure. I'd have to talk to the staff, and I can get back to you on more information about that, because it's coming to light to me as we are talking, or as I was coming into this meeting, about what that conversation was with. So it's a mistake that we made. But we want to make sure that we are communicating about the guaranteed basic income, because we think this is one of the programs that we should be looking at in our equity work around removing disparities, and we need really true data on the impact. And so if there are surveys that are needed to make the case, we might have to make that case to you as well, that we would need that money. So I apologize for misstating that we had the money, but that's where it is. There was no, it's just an error in communications between us and the staff, so I apologize for that.
Thank you for that clarification. I think it would be wonderful to just receive some additional information from you regarding what you shared here today, and I think it'd be helpful to understand in the wrap-up work, the cleanup work that's remaining, if the remainder of that money is all going to be used to complete surveys, and if that is the case, can you just help us understand, what's the total number of people that are going to be surveyed, and perhaps there's additional work that needs to be done as well, and so if you can just follow up with that.
I will dot the I's and cross the T's and put some belts and suspenders so that the information you're getting is the most accurate, most complete that you can have for this one. So,
wonderful. Thank you very much. And with that, I will recognize Councilmember Chavez.
Thank you, Council Vice President Chuck Day. And I just want, for the public record, it wasn't just in council. There's meetings that happened where I was told the same thing. So it's not that it was just in council. So.
Wonderful, thank you. And with that, thank you all for your time today. We have concluded all business to come before this committee today, and without objection, we stand adjourned.
We're ready.
They'll probably need a couple minutes.
Okay, perfect.